Good morning, traders. Chris Buzz here with your morning look at markets for Thursday, February 11th. All right, let's dive right into it. Yesterday reminded me of something, and I'll share the story with you. You're driving along with your family, right, on a beautiful summer's day, not a care in the world. Maybe you're out on the freeway. Traffic's pretty light. You're cruising along. Kids are in the back, playing music, doing their own thing. Your significant other's sitting next to you, playing a game on the tablet. You're just cruising along, not a care in the world. And then all of a sudden, out of nowhere, in the median, you see a mangled car where you're wondering, did that guy make it out alive? You see the EMT and the police and the fire truck mopping up the scene, and you're thinking to yourself, how did that happen? How did that happen? And so you drive by, and then you tell your kids in the back seat, hey, do you guys got your seatbelt on? Right? And you back off your speed 10 miles an hour, and you just think about that for the next 90 minutes. Like, out of nowhere, something horrible happened. You don't know how or why. You never will. But you realize in that moment, anything can happen at any time for any reason or no reason. And so yesterday, we're cruising along, in our little uptrend, making new highs, not a care in the world, probably loading up on risk, right? We recaptured the midpoint of the channel, all's good, and then out of nowhere, you get the flash crash, and they just pull the rug on it, just like the car in the median, for any reason or no reason, probably no reason, and down you go, right? Now, what I want you to do, if you haven't done it already, we've talked in the past about journaling and writing down your thoughts. What you should do is think back to yesterday and think back to what you were feeling in real time when that happened. Were you thinking to yourself, hey, I want to use this opportunity to get long? Were you saying, holy shit, I had way too much risk on, because if that second candle was like the first candle, I would have been dead? Or were you thinking to yourself, man, I just dodged a frickin' bullet, right? Because I was way off sides, and thank God they bought up that candle. Think about that. Write it down. Another thing I thought about was, we're just coming out of the Super Bowl with Tom Brady appearing in his 10th Super Bowl and winning his 7th. And I think about him, really at any point in the game, but, down at the 1 yard line in the Super Bowl. If it were you or I making our first appearance and we were on the 1 yard line, we would be so nervous, right? We would have a lack of composure just because we've never been there before. And that's why they say experience counts for so much. Having been in 10 Super Bowls and feeling that repeated pressure again and again and again, and failing at times, but then conquering at times, there's nothing Tom Brady hasn't seen in his Super Bowl experience. And to a way larger extent, than whoever he is competing against on the other side. There's just nothing comparable. And so that's how it goes in your market trading as well, right? The more times or the longer you sit in the chair and in real time experience these flash crashes and market conditions and all that, the more comfortable you will become when those things happen. And you won't become, totally discombobulated and, get knocked off a center, get knocked off your game plan, and then, throw that interception on the 1 yard line or fumble the ball or whatever you might do. You'll execute the play and then you'll evaluate. So think about those scenarios and, write down those thoughts and feelings that you had, and those will go in the collective memory bank in your trading for the next time it happens, because it could happen today, it could happen next week, but it is going to happen again at some point, and then you'll be more well prepared. So let's dive into it. As we talked about yesterday, we had the flash crash. Notice the place where it stopped. We had a well-defined level at 388. We undercut that a little bit. If this channel line was drawn just a little bit different, we would have had a tag of that, and then we recaptured it and bought it back up and pushed it into the range. Now, what does that mean for going forward? Well, remember what we always say: whenever you get a breakdown candle, the true all clear comes when the top of the breakdown candle is recaptured, right? So you come down here, that's a breakdown candle. There was follow-up selling. When you come back up and recapture that level, that more or less is the all clear. Notice here where we broke back above, we came back and tested that level several times and it held. So that was more or less a validation that that level had now become support. Now, does that mean you can't buy down here? No. But what it does mean is that this is more of a bounce trade, and this is more back on trend trade, right? Because you recaptured the level and then you recaptured the trend. So you're back in a trend trading scenario, whereas here you got you were playing for the bounce, right? And you ultimately got it. So right here, added caution is warranted. We don't get the all clear until we recapture this 391.50. And also notice that we've got a bear cross on PPO. And if I were to draw a trend line here, we broke trend on RSI as well. Still in the green, still bullish. This is very cautionary because we're at the top of this big momentum swing, and now momentum has rolled over. And is that going to be this scenario where prices fall away, or more or less this scenario here where there's a loss in momentum, but it didn't really result in much of a price move? So we're going to have to watch that. Here's the 30-minute chart. Breakdown candle. Third candle, reach down, and then your buy point would be, as we've discussed, a recapture of a prior well-identified level. And here it was 380.50. And then notice, if you missed this or were scared, look at the follow-up candles. You had let's see, you had you had 3 consecutive candles. So that's an hour and a half of time, all reaching back to this 388.50, more or less tagging it and being bought at that level. So collectively, these 4 bars were validation that the selling was likely over. At the very least, you knew that 388.50 was your line in the sand, that if they pushed it below, then there could be, follow-up selling down here. Because at this point, this was a bear flag, a flat flag. But the bears had no follow-up power, and so this level held. And so you could have been long against 388.50, and then you got, you got to push up the rest of the day. Qs, breakdown candle, came back to this 330 that we had actually talked about in the prior days, and then they recaptured it and then pushed back up to the top of the channel. Now, again, nuanced situation. We've been pointing out these bearish divergences, and then yesterday we got this confirmed bear cross and momentum. I'm more cautious here because we lost the channel, we were outside the channel, we dropped below, and now we're back testing this channel. Now, it was about 7 o'clock when I started the video, and futures were green. So it's likely, if that holds over the next couple hours, we will open green and just above this trend line. I think that this is a really good go, no-go level for those on this time frame. Because if you're above the channel, nothing bad can happen. But here below, you are vulnerable to revisiting 330, revisiting the midpoint of the channel, and even coming back to the bottom of the channel, because that's what channels are all about. Top of the channel, liquidation bar, bottom of the channel. Buy it up, come back to the midpoint, liquidation bar, bottom of the channel. Top of the channel, bottom of the channel. Top of the channel, outside, liquidate, buy it up. Like, this is the same scenario, right? Outside the channel, liquidation bar, buy it up, recapture the candle, gap down, bottom of the channel. Outside the bottom, recapture, back up to the top. Now, does that mean we have to go to the bottom of the channel? No. But there's a lot higher likelihood when you're outside the channel and then you lose it, the path of least resistance would have to be lower, right? Because now you're back in at the top of the channel, and we've already seen however many times, once you come back in to a prior trading range, the technical target is the bottom of the range, right? Just like in our consolidation boxes. In channels, it's no different. So I wouldn't be surprised if, we might peak above and then come back in below and then come back, if only to revisit this low. That's a real common, technical move, to have a down bar, a bounce, and then come back to revisit the prior low and then, either buy it up or proceed lower. Here you see that breakdown candle a lot better, and the reach down below this 330 all the way down to almost 329. Here was your opportunity to rebuy or to buy for the first time with several follow-up candles that reached back to this 330.50 level and then higher. So, I could draw some parallel lines here to make that look like a bear flag. It's a little extended for me, so I didn't do it. But what you want to see if you're a bull is recapturing that breakdown candle high. And today, if we make a push back up to 335 and you see, a candle or multiple candles not be able to get through, that's your objective short, right? Coming back up to resistance at the breakdown candle high where price could not take it out, that's an objective short with a stop just above. And then you can see, do they sell it back off and come back and retest this low? So those are some ideas. Now, if they take it out, then you got to be long, right? New highs, you got to buy. IWM, steep uptrend, bearish cross on momentum, RSI dropping below 70. Those are cautionary yellow flags. Be careful up here on IWM. It's really extended. You can see the momentum, starting a bar down below zero. If price loses this 226 level, I'd be concerned that it's going to have a deeper pullback. Here we see it on the 30-minute chart. Exploded, came down here to tag 225, which was a predefined level that we had. They quickly bought that back up. So same idea here. If you see price come up to 230 and have a lot of trouble, you could anchor a tactical short right there with a stop above and then see if they, bring it back. If they push above, then you're quickly stopped out for a paper cut. No harm, no foul. But that is where I would be looking to take a shot on the short side if price finds difficulty here at 230 with momentum coming out and RSI dropping out of the overbought zone. Facebook. We talked about this igniting candle yesterday where they brought it back into 270 where it held. Well, yesterday they popped it to 274 or just shy of that, and that's where the rejection happened, and then they sold it off and then bought it back up again, which was, a real strong close for Facebook because it could have easily, just kind of hung down here at the lows. But what I wanted to show you, and that's why I've left this chart in annotation mode to point out something. We had been working with 270 as our pivot point. And, we were saying long above and, possibly short below if you wanted a tactical trade. But what I was noticing, and should have made this adjustment on the chart, we had, I'm going to do it here. See if I can do it in real time for you. We had 4 places where price had come up and gotten rejected short of 270. So what I could have done and should have done is say, okay, let's fine tune this level and bring it down to where price showed us that there was resistance, more or less down at the 268.25 level. And then yesterday, that would have been a much better gauge when this pulled back. That was the real support right here at 268.25. And you can see that on this liquidation move, it came right into that level and held for several hours, and then they bounced it into the close. Now I can do the same thing here. Let's pull that down to like 272. $272.25, something like that. And so this morning, if price can take out that level, then you got a good level to shoot against on the long side, and then you can look for 280. There is a little level here, which I can drop in. Let's go ahead and do that. There's a little level here at 276. Notice the high volume over price bar here. You've got a little resistance band between really between 272.25 and 276. Once you take that out, then you got a much clearer path to 280 and then 285. So that's what you can do there. And let that be kind of a reminder for you that the charts are always dynamic, and there's, you can adjust these levels, because this is a lot more important here than what happened back here. So you can use the prior price action to inform yourself where you want to put that support level. But here it was pretty clear with all these touches that that was the true line of resistance. Apple remains weak, remains trapped in a consolidation area between 135.5 and 138, let's call it. They reached up, got rejected again, and moved back below and recaptured that 135.5. Now, if you're into Apple and you want to trade it, you can be long right here against 135.5, 130 with a stop at 135. So that's 50 cents a risk. And you're hoping for a bounce back up to 138. So you've got 50 cents a risk for 250 in potential gains. So you can look at it that way. But overall, not a ton happening. Tesla's been very weak. We had this level nailed, which is always exciting for a technician to, have the needle bar come down and tag that level. But notice that unlike the other indexes and stocks that we've looked at, it failed into the close. So it got that initial bounce. The second bar, they sold it back into that prior selling. Went flat for the balance of the day and then closed low. So 800 is your, that should be a solid pivot. A break below 800 would favor lower. As long as it holds, you can be long and look for a bounce back up to 830. But all in all, weak price action. We've gone from 880 to 800 just in 3 days. So Monday, Tuesday, Wednesday, selling in Tesla. Microsoft, Frustrating. Here I thought I had it. Here I was, finally, I got the breakout. Here comes, 246 and 250. And then, of course, they liquidated it, brought it back down below. Had a decent finish, but, when you're in a weekly option, that bar is pretty much death. And, you just got to get, honor your stops. As frustrating as that is, you don't know they're going to buy it up at the close, so you just get stopped out and reload. So, and let that be a lesson. Weekly options are great until they aren't, because you've got no margin for error. On a Wednesday at noon, if you're, with 2 days or 2.5 days to expiration, and you get a liquidation bar like that, you're pretty much dead. So watch that exposure if you're day trading or actively trading, because you get 4 or 5 positions on whatever you're doing. That can be, you're the guy in the median with the twisted car, and people are looking like, did that guy get out alive? If you got a lot of positions going and you get that liquidation, you won't be able to close them fast enough. So always keep your risk at a level that you can handle, and always keep in the back of your mind, what if this thing liquidates? And that should back you off the gas a little bit, just thinking about that. Amazon. I know there's people laughing at me, but the free 50 club worked again. Open above 3,300. As soon as you broke below, you got the flash to 3,250 or 3,254 was the low. So you got your free 50 club again. $46 if you're ready for it. Keeps working. Down at 3,250. You could have been covering there, or you could have flipped to green once you saw that buying. But even if you didn't, close it out and wait. Close it out and see what happens. So here at the middle of the range, there's nothing much to do. I've dropped in this downtrend line, which is coming off. Coming off that I don't know if this was pre-earnings or I think this was earnings, pre-earnings, and then they've sold it off ever since earnings. So really weak on Amazon. If you recapture this downtrend at 3,300, be a buyer there, because you will have taken out lateral resistance and downtrend resistance, and that could serve as an igniting level to drive higher here on this break below. But until that happens, you got to lean bearish here, right? And look for 3,300 to be rejected, because now all of this is resistance, and you've got downtrend resistance. If you saw 3,300 price come up here and have a lot of trouble, that's your objective short, looking for a move back to 3,250, because you've got 2 layers of resistance there and not just one. Google, you got your reach back to the bottom of the box right here at 2050. If you were not in it, but you wanted to be, that was your opportunity at the bottom of the box. So, now also what I've done here is put in a midpoint in this consolidation box. And you're always welcome to do that when you've got a consolidation area. Put in the midline. So 2100 to 2050. Your midpoint is 2075. And look how well that level has contained price. So I think you can be long against 2075, hoping for a breakout. But below that, you've got to favor a move back to the bottom of the box. So, but all in all, consolidating this big gap up after earnings. Netflix, pretty positive price action. We talked about the igniting candle on Tuesday. Consolidation. When they pulled the rug yesterday, wasn't bad at all. Came right back to trend and closed with a big igniting candle here at between 2 and 3, and then maintained that level in the final candle of the day between 3 and 4. So looking for a breakout there to push it above 570 to take it higher. Notice this large volume over price bar here would be resistance, and then if you took that out, you would have some pretty clear sailing up to 590. So, okay guys, I hope the levels were helpful. Always keep in mind in your trading that bad things can happen at any time. That's not a reason to, pull over and wait. You can still keep going on your bullish road. Just remember that, remember your risk levels. Don't get too far out over your skis, and make sure you always wear your seatbelts, because you don't want to take anything for granted. We do have some elevated caution, as I talked about, with the bear crosses on momentum across the board. SPY, IWM, and the Qs have all put in bear crosses on the 2-hour, so that's cautionary. But all the levels are identified, and use them, trust them, and have some good trading. Always have a plan when you get in, and always know where you're going to get out. So let's leave it at that. If you're new to the channel, please subscribe, hit the alarm bell, and if you've got people in your trading circle that might benefit from the analysis, please pass along a link so I can get out there a little more strongly. I'd appreciate that. Also, over in the show notes are links to the blog site and how to register for all my content, and then you'll get an email each and every time that I publish. Yesterday, did a lot of adjusting on our open option positions, rolling up several and closing several of them. You'll get notified on tactical moves like that during the day. So please register for my content. You'll also get an invite link to the trading room, which remains a great place for camaraderie amongst aspiring traders and for lots of good ideas, stuff that I would never see if it was just me, myself, and I. So it's been a good resource for everybody that's been involved in the room. All right, have a good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.